Going on YouTube? My name is Todd with the Dividend Stock King with another video. Today we're talking about I have another case or another reason to be a dividend investor, right? Especially high yields, right? With a growth ETF or a growth stock, you buy it for $20 and it goes to $30 and you're up $10, right? But that's not always the case. It may go down, they go back up, and you ride a roller coaster up and down. Over time, it should go up. With dividend investing, another way to think about dividend investing that people don't talk about online is that the income fund itself is paying you back, right? This is MST, right? Um, Now his one share of MST, and they was paying the first dividend was 34 cent, 27, 43, 62, 83. I have like three shares. Let's just say I had like one share. Say three shares. So came out $20. Right now, I'm recording the video at 17. Let's just say it's 20. It's for $60. I spent $60, right? Bought three shares. Don't touch it no more. It's paid weekly. Every week I'm getting a small dividend, 60 cent, 40 cent. This today did 87 cents. The ETF is paying me back the money I put in, right? It's paying back the money, right? So with the $87 and the 62 cents, sorry, with 87 cents and 62 cents, that's $1.20, $1.40. And with the 43 cents, $1.80, with the 27 and the 34, say it's $2. So I spent $60 and I got $2 back. But I'm getting money every week. So this is another case for dividend investing. When you buy a high yield ETF like that with higher yields, when they start paying your dividends back, they're paying back the money you put in. So, because right now, MST pays around 26, 27 cents per share. So, if you bought one share, right, and hold it for a year, I mean, hold it for, I don't know, two, four, six, eight, 10, be $1. So, about 4.5 weeks, a month. So, every month you get about $1.10. So, in the year, you probably get, you know, 14 to $15. So, in one year, it's paid you back $15, right? So you're pretty much 4 to 5 months off getting your return back on investment, meaning you put in 20, the ETF paid you back 20. So um, my thing is this: I'm not financial advisor. I'm not getting financial advice, but you see how um, over time it will pay you back your money. It's gonna pay you back your money, right? So I said about a year and a half, 2 years tops. It'll pay me probably my money back more than likely. Even if I buy one share and it pays 20 cents a week or 25 cents, you get like $1.20, $1.10 times $1 times 12. That's like $13 because you got to change whatever $13. And there were 6, 7 months after that, it'll pay me the rest of the money. So I'm gonna get my money back, right? This is why it's so important to start as soon as you can, right? That's why I got it in my Roth account because I got 20 years to reinvestment. I got plenty of time to get the money back. I got it in my kids' account because my kids can't touch the money for a good 15 years. So by the time they get the money, they pay back all the money that we put in, right? That's why it's another case for dividend investing that people don't talk about. People talk about the NAV. People talk about it's going down in price. People talk about a lot of things. But one thing they don't talk about is return on investment, how long it take you your money back, and the sooner you start, the sooner you put that first dollar, a few dollars in, it's paying you back. Even if you put in $10 and they're paying you 3 or 4 cents a week, it's already paying you back. It's paying you back slowly, but it's paying you back. So if it pays you back that slow on a weekly or monthly basis, it's good to get started. Don't wait. Get started. Even if MST is at right now, MST is at 17 and you just you get one share, every week is paying you back. It's paying you back the money that you put in, right? So that's what I see. Like that's why when I in my Roth account, then my brokerage account is more focused, right? But also my brokerage account, That's 60 cents, that 40 cents, that's a dollar. That goes back into the fund, which ultimately makes me a little bit more money. You want to get started, right? That's why I like dividend investing. Now, I'm not against growth investing at all. But I'm saying the income investing, especially for a child, is powerful because you could buy one share of MST and your kid's like 5. And when the kid turns 7, MST has already paid you back the $20 you put in. So every dividend from that day forward is free money. And he can hold it for another 10 plus years. How much money would that be? And get dividend every week. So dividend investing for my retirement, if my kids account, I go income first because the income, well, as soon as the money comes in, it's paying you back. Especially with a weekly fund that pays every Friday or pays every Wednesday or Tuesday or Thursday. It's paying back the money that you put in. I'm a huge fan of that as well. I'm a huge fan of that, and that's why I got my kids going. So honestly, if you have a new kid, if I have another kid today, I will start with all high yields. I'll get the weeklies and monthlies when they turn 6 months, and then by the time they turn 2.5, I mean, still young. All those ETFs I bought a year and a half ago, almost 2 years ago, has already paid back all the money that I've already invested. That's why I go income first. Then once the income is generating, and then when they're getting income, I can reinvest it and get more shares. While I was reinvesting, I could then switch my focus on to growth. Because the income, and I love about income, the income does itself. The income produces itself. The income's coming in every week. It's coming in every week, and it does it all by itself. You don't have to do anything with income, right? Um, the income produces itself every week, so you don't have to do anything but sit back and put on drip and sit back and do nothing, right? Even with the growth, you don't do anything anyway. But I like that because you can just let the income come. Get a YMAX or a little bit of Alti, and you don't gotta buy a lot. You just throw $50 in Alti and let it drip every week, and then you could just and the kid and my son's still 2, so he has YMAX and Alti, high yielders and weeklies. He's only 2. I still have plenty of time to focus on Coca-Cola, Tesla, Amazon, Google. I still have time to focus on other funds, and the income is still coming in every week. It's still getting a dividend. It's still dripping. Now we can focus on in growth, right? So when they turn of age, when they get the portfolio, they already have a set portfolio of growth and income, right? And if they had income for the last 20 years or 18 years, 16 years, that the compounding effect is amazing. So that's my case for getting dividends first, is that you could compound faster, you get your money back faster, and as soon as you put that first dollar, $5, $10 into it, you are getting um, you are getting income. You know what I'm saying? You're getting money today. You're getting money, and they're paying you back your money. It's not like you're buying Google stock and then you have to hold it for a long time because you're not making any money. And even you buy stuff at $10, it goes to $100. You've made money on paper until you sell, right? With the income could go up as well, and you get dividends on the way, right? But ultimately, if they get paid back the money you put in, your risk is pretty much zero. I mean, the funds could go away and you still be okay because you made all your money back. So it limits your risk. It's passive income. It's a passive income. It's one thing that we all need anyway. It's passive income. We need a stream of income that's not related to our jobs, and it's paying you back. It's compounding, and just do nothing. For my kids' account, my brokerage, I do literally nothing. I log into it, make sure everything's get paid, make sure everything's get reinvested. That's literally it. And if I want to, I could take my Aiden's making like $200 a month. I could easily take $100, put into a Tesla stock, or put in Google, or put in Amazon. He's 6. So again, he has plenty of time. Plenty of time. That's why I go income first. And I could take $100, put in growth, and take $100, put in income. Or take all the dividends he's receiving and put all in Tesla, or all in Amazon, or $50 Amazon, $50 Tesla, $50 whatever else, right? VU, $50 VT. That, and then it's funding itself. So I am removing myself as an income source. So that's another case for dividend investing. Thanks for watching.